policy, right? Okay, so specific role spaces, okay, that's fine. So now, did you guys just copy and paste this from what I put up on the thing on our platform, or did you guys actually memorize this to some extent? That's going to be my second question. Okay, so Prabhashni, for the first time, she actually, okay, I'm very happy to hear that, right? This is what you need to know. I'm very proud of you guys, right? This is what you need to know. Okay, you're already ahead of the rest of the group on this, right? So you should give yourself a round of applause for that one. Because at the end of the day, you get a theory question on changes in accounting policy. You get no marks if you go into application without even writing the theory down. And the theory is given to you in your study guide, and they expect you to memorize it. They just don't tell you this, right? So it's good that you guys memorize it. I'm very, very, very happy that you guys did that. I know it's not the most exciting thing. Don't get me wrong. I was also a student, also did this. But it's part of the process. You know, unfortunately, you've heard the expression, no pain, no gain. It's a cliche, but it's the absolute truth. So it's part of the process of doing it. There's only one way of doing something, and that's the right way. And any way you're going to try and shortcut it, you're going to see you're going to be coming up short, and you're not going to be getting the results that you want. And then you're going to just end up having to go back and just do it from scratch the way you should have done it before. And, you waste so much of time. So anyway, let me start sharing my screen now. We'll go through the theory quite briefly. So this is IAS 8 itself. Just let me know that you guys can see my screen. So I did do this on the live session as well, but just for the purposes of revision and just obviously interacting more with you guys, because obviously on a live I can't interact as much as I would like. The objective of the standard is not really something that you need to swat off or memorize. It's more for interest sake and just knowing what the purpose of the standard coming out is, but you won't ever really get a question that's going to require this as applied theory, right? Scope in terms of, okay, so for you guys right now in third year, you don't need to worry about the scope, right? Certain things will be scoped out of the standards that you can stress about in CTA. Because in CTA, you'll get certain scenarios where you'll get an asset and it looks like it's PPE and it's actually scoped out of PPE. And then you're going to go and apply IAS 16 and you would be completely wrong. And you'll get 0 marks and then you'll be like, oh my God, UNISA, I'm deregistering from that. Right. The definitions, as I've said, are important. You don't need to swat off every single definition. As far as I'm concerned, the main thing for today, as I said, the accounting policies one. That's why I'm giving it to you in bite-sized chunks, right? Because in the ideal sense, you'd know the change in accounting policy, change in accounting estimates, prior period error. Very important, because with the prior period error, guys, this is a huge thing in practice as well as in terms of classification, because not all errors are necessarily prior period errors. It becomes a huge debate, especially when auditors are involved. Okay, as long as you know these 3 definitions, that is fine. You can't study the standard without knowing what it is. And even if you don't memorize it word for word, but at least you have the gist of it that's there. That's fine. Because the point we're trying to move at is that if I ask you what's a prior period error, you don't tell me, no, it's like a mistake that was made. Maybe they were supposed to record something at 20,000, recorded at 40. No, that's not a prior period error. You need to be giving me an answer, let's say it's an omission or a misstatement from the entity's financial statements for one or more prior periods that came up as a result of the use or misuse of reliable information that was available and could have been reasonably expected to influence the decisions made by users. Something just as simple as that, right? Basically gives the crux of this definition. Okay, so not too difficult, not too much to really get into. The retrospective restatements, It's something we'll get into now, but it's good to know what retrospective restatement means, because we always talk about it. Hey, we must apply a change in accounting policy retrospectively. We must always, apply a change, correction rather, of a prior period error retrospectively. Sounds very nice, sounds very fancy, sounds wonderful, but at the end of the day, what does it actually mean? And it means that you're correcting the recognition, measurement, and disclosure, right, of the elements of the financial statements as if a prior period error had never occurred. So do you guys notice now, when we're doing a prior period error and we correct it, what happens? You have your correcting journal entries, which cover recognition and measurement, and disclosure, which is your prior period error notes. That's what we mean by retrospective restatement. So if I ask you guys to account for a change or for the correction of a prior period error, accounting for it, how do you account for it retrospectively? What is meant by retrospective restatement? You know, it's going to be correcting journal entries and the prior period error notes, right? I'm just going to stop on that just to take questions. How many of you guys are, clear on that? Has that been a brainwave moment for any of you? Does that make something a little bit clearer for you guys? Thumbs up if you guys have actually, if it's starting to sort of piece together now and gel together now. So do you guys see how the theory is informing what you're doing? Why do we do retrospect days? Do you guys see how we're making the link? Is this not better than using slides? You will get slides, don't worry, but just not for the studying. Okay. Any questions at this point? If there's any questions, please raise your hand. And if you don't have any questions, then just thumbs up, then I know to continue. Or heart reaction. Okay, Pusisiwe, you have a question?
Just a little silly question. I'm getting a bit confused in terms of the retrospective and the prospective application. So
Okay.
from what I'm understanding, I'm not sure if I'm correct. So retrospective, do you correct the prior periods, and then the prospective you only change it currently and then going forward?
That's exactly what it is. So with retrospective, we always look at it from the prior period, the earliest prior period presented, not just last year. If we had 3 prior periods presented, we'd correct all 3. It's like that. So that's retrospective. And then the prospective application is given here, right? And this is, just applying it from the date or after the date in which the policy change or the change in estimate change. So it's just, you don't touch your prior period at all. And that's the easy bits, those ones are the easy ones, they're not difficult to do. It's more the retrospective one that's harder. Okay, with me. Okay, so let me move on from there, right? So now you guys know what an accounting policy actually is, and this is good, right? Now, the theory that is here in IAS 8, obviously it looks overwhelming at this point, and it might look like, okay, well, you know what, there's so much of this, how do we know what is applicable, what isn't applicable, right? Because you can see there's a lot, right, to say the least. So I'm going to break it down for you guys in simple terms, right? Most of the time, all that gets focused on is this part over here, applying changes in accounting policies. But you get tested on all of that, right? So we covered this during the live, and this was in terms of where I said, okay, how does an entity select and apply an accounting policy? So the first point is that the entity has to make reference to the IFRS standards relating to that particular transaction or event, and base its accounting policy on that. And if there is no accounting policy that applies to that specifically, then management needs to use its own professional judgment to develop an accounting policy to get to an accounting policy that meets all of these criteria. Again, this is in the theory that's there. I'm not going to labor the point. But in doing so, right, they need to consider several sources of information. So the first source is to consider the requirements in the IFRSs that deal with similar issues. And I gave an example of that with the exchange of inventory, because like I said, in IAS 16 deals with the change or the exchange of items of property, plants, and equipment, but IAS 2 doesn't. So if we acquired inventories in an exchange transaction, then IAS 2 doesn't say anything, but then we can then refer to the principles in IFRS 16. Now, how can this come up as an exam question or an assessment question? You can say, like, maybe you are the junior accountant or you're the financial manager, a new transaction has come up. The financial director is uncertain as to how to account for this transaction. He wants guidance from you. What do we do? Right? Then you need to say, well, you know what, when we have an accounting policy or when you develop an accounting policy, we need to refer to the IFRS dealing with that standard. Okay, here there's no IFRS dealing with this issue, not standard issue. So we need to look at another IFRS that deals with a similar issue or matter or transaction. And then we need to consider the definitions, recognition criteria, and the measurement concepts contained in the conceptual framework. And then you apply accordingly. Okay. In addition to this, you can also consider the most recent pronouncements of other standard setting bodies, meaning that, let's say there's nothing in IFRS, but maybe GRAP has something that deals with it, or IPSIS has something that deals with it, or US GAAP has something that deals with it. Then you can apply those as well to the extent that they do not conflict with the sources above here, meaning that you don't go and the definition of an asset is different in this one compared to what it is there, because then you have a conflict. Okay. So that's it in a very brief nutshell, but do you guys understand how the process of selecting and developing your accounting policies should work? Okay. Will you guys be asked to develop an accounting policy in a question? No, you won't. Okay. So if you add that as a worry or as a concern, no, you don't need to know how to, develop an accounting policy. That's a nightmare to mark as well. So you don't have any stress, but you can, and listen to this very carefully, can get an accounting policy given to you, which you'd need to correct. At third year level, though, I don't think it's very likely that you're going to get that, but just to keep as something at the back of your mind. Okay, moving on. So the consistency of accounting policies, this is a principle. So yes, an entity can change its accounting policy. It's not prohibited from doing that. That's why the standard actually exists. But you cannot change your accounting policy willy-nilly. You need to firstly apply your accounting policies consistently for your transactions. So for example, let's say we have property, plants, and equipment, right? Now let's say I've decided that I'm going to carry my vehicles on the cost model. Okay, I'm going to ask you guys, this is an open question. You guys can answer it. Should answer it. Can I carry some of my vehicles on the cost model and some of my vehicles on the revaluation model? What do you guys think? Am I permitted to do that in terms of IFRS? Yes, Prabhashni says no. I'd like an answer from all of you on this one. So just think about it, right? Am I permitted to do that? Okay, I don't think so. No. Okay, I'm not certain, but I don't think so. Because this could come up as a very nice exam question. I'd throw it in as well, actually, because I know that this is an area of uncertainty. Okay, so I think you can based off the useful life marks, not very correct, not. Okay, Ria says, okay, so didn't you say no initially? Okay, so, so what's the correct answer? Okay, I'll let Ria finish typing.
Hi, Masum. Sorry, I think rather let me talk. It's difficult to type, and you've got so much going through your head.
Yeah, that's fine.
I think it is permissible to. It depends on the type of asset. Machines could be on a diminishing balance method, and your vehicles could be on cost. I don't think it's like a. But now I'm saying I'm not sure, but I don't think it is.
Okay.
So I think you can use two cost models at a time.
So yeah, okay. So let me give you guys the answer to that. So that was just a little bit different to the question that I asked, right? But you don't have to answer incorrect. So basically, right, in terms of IAS 8, if you have an accounting policy, right, for all assets of a particular class, you have to apply the same one. So if you have what are classes of assets, land, buildings, vehicles, machinery, right? Those are your classes of assets, right? For examples. Or if you measure land on the cost model, then all of your land must be on the cost model. If you measure your machinery on the cost model, all your machinery must be on the cost model, right? You can't have a scenario where you have some items of machinery on the cost model and some items of machinery on the revaluation model. That is not allowed, okay? But for the different categories of your assets, you can say land will be on the revaluation model, vehicles will be on the cost model. That is allowed. So each class of assets can have a different cost model, but the assets within that class must all have the same, accounting policy that's applied. There is an exception to this, and this is where this part comes in over here, right? Which said that if an IFRS requires or permits such category and an appropriate accounting policy shall be selected and applied to each category. But there is, a scenario where you can deviate from this, and this would be in the case of investment property that's measured at fair value, right? So we know that if we have investment property that is measured on the fair value model, every year we are remeasuring it to fair value, right? That's great. However, if we have a certain period, let's say for certain investment properties that we can't determine a fair value, then for those investment properties, we are allowed to carry those on cost until we get to a fair value. So let's say I've got 10 investment properties, all measured at fair value. Now I'm building a new one, and it's a very high-tech specialized investment property, right? So now I can't actually determine the fair value for this, right? So end of year one, the building is done. I bring it into my books. I try and get a fair value. I can't get a fair value. I do my fair value adjustment on the 10 that I have, but for this one, I can't get a fair value, then I carry it at cost. Year two comes around, I do my fair value adjustment on the other investment properties. On the first one, that on this particular one, again, I still can't get a fair value for it, then I still carry it at cost on the cost model, not at cost model, meaning cost less accumulated depreciation and impairment losses, right? Year three, let's say I do my fair value adjustment as well, and then now I can determine a fair value for that building. Then I'm compelled to move that from the cost model to the fair value model. Okay. Does that make sense to you guys? Did you guys know this before, or?
Sorry, Masum, if I can just ask, so do you mean that, I don't know if I've missed the boat here, but do you mean that if at the beginning of the year you can decide to use a certain like cost or evaluation model, but then decide to change it at it's still fine?
No. So basically, if you have a certain accounting policy, either the cost or the revaluation model being applied to your assets, right? You have to apply that model because that's your accounting policy. So all your assets there need to be accounted for in terms of that particular model that you've chosen. However, in the case of investment property, there is an exception where if your investment properties are carried at fair value, but you cannot determine the fair value of any particular investment property, then you can use the cost model until such time you can determine the fair value. Because remember, our accounting policy in the example was that, all of our investment properties are carried at fair value. We have 10 of them that are carried at fair value. So every year we do our regular fair value adjustments on these properties. But now for this one that we've built, we can't determine a fair value for it. So we have to then carry that at cost. Year 2 comes around, we still can't get a fair value for it. But remember, our accounting policy is fair value, but now we can't get a fair value for it. So then in this scenario, then we can measure it at cost until we get a fair value. Does that make sense? Okay. And the reason for this is just to make sure that there's no inconsistency between, your accounting policies, but obviously, with IAS 40, there is this exception, but it's an exception, right? It's not something that's considered to really happen very frequently. Okay, so I'm going to move on from there because I want to get into the actual accounting for this now. So changes in accounting policies. Like we said, you get 2 types of changes where the change is required by an IFRS, which is a mandatory change. That's what we refer to it as, or the change results in the financial statements providing reliable and more relevant information about the effects of transactions, other events or conditions on the entity's financial position, performance or cash flows. That's known as a voluntary change, but the voluntary change must meet this. That's why you'll notice in the questions that you get, you'll see it will say typically, especially in CTA level, management decided to change the accounting policy from FIFO to weighted average, that kind of thing, because management is of the opinion that it will result in, more reliable, relevant information, yada, yada, yada. That's not, how many of you have actually noticed the questions saying things like that? Just put a thumbs up if you have. But there's a reason that it says it, and that's the reason, so that it's justifying why. It's not information just for the sake of, hey, let's just throw something there for the students or make it sound fancy. Do you see why the theory is, why are they saying that? Makes a lot more sense now, doesn't it? Now you're seeing the big picture of everything. But that's why I say this is how you're supposed to be studying it. Obviously, on your own to read the standard is a nightmare. But this is why I use this approach, because now you're piecing everything together. And this is not given in your slides, guys. So, this is the best way of approaching it and seeing the full picture. Okay, this isn't really important. This is important to know that the following are not changes in accounting policies. I did go through this in detail during the live session that I had on YouTube. So refer to that video. I did make it viewable. This is also important just to note. So the initial policy to revalue assets, I explained this in quite a bit of detail. But the long and short of it is that if you have something on the cost model and you apply the revaluation model, right, that's a change in accounting policy from the onset. That's what it sounds like, right? Because our accounting policy was the cost model. We changed it to the revaluation model. So it's a change in accounting policy. In terms of IAS 8, yes, it's a change in accounting policy. That's not incorrect, but it does not get accounted for in terms of IAS 8. It gets accounted for as a revaluation adjustment or revaluation surplus or deficit in accordance with IAS 16 or 38, meaning that there's no retrospective restatement or anything of that sort when you need to change an accounting policy from the cost model to the revaluation model. Have you guys picked that up? You tell me anywhere you come across a question that said that the entities on the cost model and they decided for the first time to change to the revaluation model. It's a change in accounting policy and you had to do a change in accounting policy question on that. Have you guys noticed that you've never come across a question like that? How many of you guys actually paid attention to that fact? Actually, that's another question. Okay, Pussy C has noticed it, Ria has noticed that. But do you see why that happens? So already from the onset, you know, if they can assess your change in accounting policy in test 3, you'll never get it on PP or intangible assets. It won't come on that. They might tell you in a sneaky way. If I was trying to catch you out, I'd do that. I'd say the entity changed their accounting policy, yada, 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 and then I know students are going to go and prepare a note on this. And it's completely wrong. All you needed to do was do a revaluation. That's it. Yeah, but you see how you can get caught out when you don't know the theory. Okay. So then moving on from that is applying the change in accounting policy. And this we're going to do practically. Okay, so I'm going to start off. It's going to be a simple example. Do you guys have a pen and paper with you guys? With you? Any of you have thumbs up if you do, if you need to get some, if you need time to get pen and paper calculator. Okay, 2 of you have shocked reaction if you need time. Okay, so you all have. Great. Now, the reason I said pen and paper, if you have your laptops, that'll also work. So I just want to ask you guys are writing online, right? Do you guys, and this I need an answer from, right? This is something where you need to give me feedback. Do you guys use your laptops and write, or do you guys use your like hand pen and paper and write? Okay, handwritten, pen and paper. Is this something UNISA required you guys to do, or is it just like out of choice? Because I know I used to get a lot of students that submitted, either or. And yeah. By the way, I'm a big fan of doing it on your laptop. By doing it, I mean the question. So I would prefer that. However, based on how CCA is going, I'd say use pen and paper, because CCA is, the way they're getting assessed there is that you come with your laptop to the venue, but you can't use your laptop to answer the question. You must use pen and paper to answer the question. So yeah, it's a weird one. I personally feel like, doing the typing is better. So like Nicole is doing it. I agree with that approach, although you can do the calculations on Excel. It makes it much easier and more accurate. But for some reason, UNISA are going to revert you guys back to pen and paper in CTA. So it's up to you guys the way you want to do it. I still feel that if you can do it on the laptop now, then, I mean, you're not in CTA yet. So, I mean, focus on getting there first, and then you can do it on pen and paper, but that's up to you guys, right? So we're going to do a question. Yeah, I've got my Excel documents open over here. I'm going to take you through the question step by step, but you guys are also going to do the question. Okay, so that is the approach we're going to have. And we're going to see, whether we can actually do it, because it sounds very easy. Changing accounting policy, not a hard section at all. Baby section, in fact, right? this is something, guys, that I expect you guys to get close to 100% for when you're doing it in the test. That's why I'm zoning in on it. I'm going to upload questions for you guys on this. This is something I'm going to be militant on. So let's say we go now, this question here, this window is out of 34 marks, right? Change in accounting policy only, right? So a lot of marks for change in accounting policy questions. So you can see we can go into a lot of detail with this. Obviously, there are other aspects in the question, but at the end of the day, I do expect you guys to be getting, not just passing the question. For me, 50% is a fail if you get with this. You should be getting, 60% is the question not going well, actually, but I'd say that's the bare minimum. Yeah, so you guys need to know how to do this because it's not difficult at all. Okay. So the question, I'm going to read it out to you guys. Do you guys have any questions before I get started with this?
Masum, is it probably possible to maybe share that question with us in the chat so we can, I know you're going to follow you as you go, but for later on, if we want to go through this recording again and try it again, is it possible?
Yeah, I'm going to send it to you guys. I'm going to upload it because I want you guys to attempt it yourself. So I'm
Perfect,
walking through this with you guys. So I'm going to take you through it and use it as a class example. Then you guys are going to do it yourselves. So we'll upload it. And then I'm going to upload a similar question to see if you guys can actually do it. If that makes sense. So do you see the process that we're following? So it takes time. That's just the thing. That's why there's no OES method or shortcut method. But by the end of it, guys, I promise you, the way you'll be able to do this question, you'll be able to do it in your sleep. You'll be, if you see this come out in the assessment, you'll be like thanking God, thanking me as well. I would hope. But that's gonna be the biggest development point that's going to come through. Okay, so let me just read it out. Obviously now while I'm reading it, I can't see what's happening here. So just feel free to unmute yourself and say, stop there. I don't understand this, that kind of thing. Okay, but I will toggle back and forth between the screens, but just so that you guys can give me some feedback. Okay. So anyway, so the following information of Stockit Limited for the financial year ended 30 June 2023 is presented to you. Okay, so this is the first thing that you always need to highlight when you are reading your information. What is my year end, right? So now I wouldn't just say 30 June 2023 is my year end. I would write in pen or pencil that what is the period I'm working with, the 1st of July 2022 to 30 June 2023, so that I know that everything after the 1st of July 2022 is relevant for this reporting period. Okay, so that is your first step. You need to draw that. Don't just look at this, 30 June 2023, but you don't even know when the year is starting, because it sounds silly, but you guys get confused. I've marked questions where we'll give you guys something like this. And obviously 1st of July is your big commencement date of the financial year. And I'll give you something in June or May, and that will get accounted for within the financial year as well. And it's a silly mistake to make, guys, but under exam pressure, it can happen. Okay. So after the draft financial statements for the year ended 30 June had been prepared, the directors of the company decided to value the inventory according to the FIFO method in order to improve the matching of income and expenses instead of the weighted average method as previously done. Okay, so you guys see that whole thing already, right? Change in accounting policy, that is what I would be writing, and the reason for this is already given, that it's to improve the matching of expenses. So they're justifying it, right? So voluntary change, so they're telling us why, okay? And this is going to give us more relevant, reliable information, okay? Profit before tax for the year ended 30 June 2023 amounted to 4,476,000 Rand. And here's the comparative before taking into account the effect of the change in accounting policy. Notice how when you have a question on the change in accounting policy, always have comparatives, because why? We have to restate. So if you have to restate, you're always going to have comparatives to restate in the first place. Okay. Retained earnings as at the 30th of June 2021 amounted to 2,990,000 Rands. So that's simple enough. How many of you know what the significance of this is? This is also always going to be given, right? The retained earnings as at 30 June 2021, which is the same as saying retained earnings as at the 1st of July 2021, right? So it's the opening balance of last year's retained earnings. You guys follow that? And why? Because you must make a adjustment to this retained earnings balance. Remember that restatement, you restate or you make that cumulative change to the opening balance of the retained earnings balance as at the previous reporting. You remember that whole thing, right? So that's the significance of that information. The tax rate has remained unchanged at 28% for the past 5 years. Okay, so that's great. And at third year level, you all get this. The significance of telling you this. Okay, why do you think this is significant? Because remember, we're going through the information, right? Now, why is this information relevant? Why do you think that means anything? That to tell me that the tax rate has remained unchanged. I mean, there must be some importance or some meaning, surely. So what do you think the significance of that is?
I could be wrong, but is it for deferred tax purposes?
Yeah, so it's deferred tax or it could be current tax depending on whether SARS will reopen the assessment or not. But yes, because obviously if the tax rate changed this year, then the tax effect this year of the change will be different. So that will be at 27% and the previous years will be at 28%. So keep an eye out for that because you guys know that the tax rate did change, right? So if, for example, I tell you that the tax rate changed from 28% to 27% in the current year, then for the current year, you'd have the 27% on the tax effect, and for the previous years on the deferred tax, you'd have the 28%. Here it said it should remain unchanged, so that's not a problem. We just use 28% straight. But you guys see how a curveball can come in, right? So, all with me so far? Okay. So that's, yeah, so let me move on. So the company provides for deferred tax on all temporary differences using the statement of financial position approach. Okay. So that's where we have our carrying amounts, tax base, temporary difference, deferred tax. That's what they mean, right? When we're looking at the items in the balance sheet, right? The company had no taxable or deductible temporary differences since incorporation. That makes it very easy. Up until 30 June 2023, inventory was valued according to the weighted average method. This method was also applied in the draft financial statements. Okay, so what does this tell me? That the method that's applied there is wrong. We need to change it. Okay, the financial statements as they are don't have the change in accounting policy in effect as yet. So we need to give effect to it. Okay. Then this is always going to be given to you, right? A summary of the closing inventory on hand at 30 June is as follows. So inventory according to the weighted average method, inventory to the first in, first out method. So over here, the one thing I would underline is to say which is my new method and which is my old method. So it's gone to the FIFO method. So FIFO is new and weighted average is old. Reason is it's sometimes very easy to get confused between the two. Okay, so always start off with, when you get to the seeing what is the new one and what is the old one. I'll write it on the question paper or, on your rough calculations, wherever you have it, but just to indicate which is new, which is old, and, have some kind of clarity on that. Okay. And then we've got 2021, 2022, 2023. So sometimes just look at the order in which it is presented. Sometimes it'll be 2023, 2022, 2021. Okay, so just pay careful attention to this it's very important that you don't get mixed up, because obviously if you do it in, the order in which you do it will impact whether it's an increase or a decrease. Okay. But I always like in my calculation, I do it in the way that's mirroring this, but I mean, however you decide to do it, that's up to you, right? So the question 8, not question 8, rather point 8 says the previous year's tax assessments will not be reopened by SARS, but the new policy will be allowed for tax purposes. So what is the significance of this? What does this mean? The previous year's tax assessment will not be reopened by the South African Revenue Service, but the new policy will be allowed for tax purposes. What does that mean? What is the point of telling me that?
Do they mean that the amount of tax that was paid or refunded won't be affected by these changes?
Yeah, okay, that does. So what is the implication of that?
Do you mean what the implication is on the prior years?
Yeah, on the prior years. So when I'm doing my note, how is that going to impact my note? See.
Will they be deferred tax?
They would be deferred tax, basically, right? So since the current the tax assessment, remember, we would show the effect of the change on the current tax payable, right? In most cases, it'll be current tax payable. However, last or in the prior years, their current tax payable is not going to be impacted because SARS is not going to open the assessment. So then it can only impact the deferred tax balance of those prior years instead of the current tax payable, meaning that we don't restate the current tax payable, we restate the deferred tax payable. Makes sense to you guys? Is that something new that you guys learned or something that you guys did now? Okay, so thumbs up, thumbs up. Okay, so that's all good. Right. So now let's look at the required. Let's see. So the required says prepare the statement of profit or loss and other comprehensive income. Right? Only the return earnings section of the statement of changes in equity, as well as all relevant notes for the year ended 30 June 2023, applying the new method of inventory valuation. Your answer must comply with the requirements of IPRIS. Comparative figures are required. No accounting policy notes are required. No tax rate reconciliation and deferred tax note are required. This is very important for you guys to pay attention to, because here's the thing, right? Comparative information is always required unless the question tells you that it's not. So in this particular instance, they said comparative information is required. They made it easy. Okay. But the truth of the matter is that comparative information, right, is a standard part of your financial statements that must always be presented. So the question doesn't have to tell you to provide comparative information. You have to provide comparative information unless stated otherwise. Okay. So you should never be missing this spot because it's a lot of marks as well. Okay. So now this sounds very daunting because, well, we're expecting change in accounting policy. Now suddenly they're coming with income statement and retained earnings section, and it's like, geez, now like how does this whole thing fit in? Okay, and how do you even start approaching the question? How do we even start looking at this? How do we start, even attempting this entire question, because already from the onset, it looks very daunting, right? So what I would do is, right, what have they asked? What is the required asking me? The required is asking me to prepare the statement of profit, loss, and other comprehensive income. That's one part of the required. The retained earnings section of the statement of changes in equity. That's the second part. And the third one is the notes. So there's how many items that are required? 3, right? So then what I would do is I would first start off preparing my income statement. So I would say stock it. statement of profits or loss and other comprehensive income for the year ended 30 June 20, I'm just going to say 20x3, right? It just makes it simple. Okay. And then I will start off with my, format, because remember, you might get a format mark for all of this. So I'll just skip a few. Let's say this can be 20x23. And you guys should, by the way, be doing this with me as well. Okay. Remember, notes are required to be referenced because that's an IAS 1 requirement. And then I need to look at, okay, what information did they give me? Okay, so reading the question, and obviously you guys don't have the question with you guys, right? Reading the question, what did they start off with? My profit before tax. So the fact that they gave you this means that automatically it's a hint to say start off with this. Okay. So I'll start off with my profit before tax section. So this is simple. You guys know how this looks like. So profits before tax, income tax expense, and then most likely this will still stay a profit. So I'll just say profit for the year. Okay, and then let's see, did they tell me in terms of my presentation what is required? No, they didn't. Okay, so I have to say other comprehensive income for the year, and then total comprehensive income. I know there's no other comprehensive income because there's no revaluation or hedging that has been done. So in fact, you can just delete this and have it as that, right? Because at the end of the day, getting the skeleton there is the major and most important part of this entire process. You need to get this information, or rather just to have the skeleton. You don't have to fill in the amounts yet, but this is, the points at which you have to start answering. Okay. So I'm just going to stop there and wait for you guys to be ready. How many of you guys have that already done? Have that skeleton done? Okay, all of you have that done. Okay, great. So that is your first step, right? So you draw up your skeleton first, right? So now let's look at the next part. The next part of the required was saying only the retained earnings section of the statement of changes in equity. Okay, so I'll put this in sheet 2. Okay, and then I will say again, Stockits Limited. Okay, and then from here, because they only wanted the retained earnings column, I would say you can say statement of changes in equity, or you can just call it an extract, but I would say never mind, you can just say statement of changes in equity for the year ended 30 June 20x23. Okay, and then what was my column that they wanted? They only wanted retained earnings. Okay, so that's my retained earnings column. And then obviously the R over there. And then we start with the format of our retained earnings. So what do we need to do? What is the skeleton or what is the templates? Right? The balance. Let's see, let me change this. Balance is at 1 July 2021. Okay. Then we'll say change in accounting policy. You guys know why we have this one. Remember, they gave us the balance as at the 30th of June 2021, which is the same as this, right? So 30th of June 2021, restated balance. And then we will say changes in equity for 2022, and then we'll say this will basically just be the total comprehensive income for the year. And then if there were dividends, we would have put dividends paid in or declared in year, but there weren't any. So then we'll just say balance as at June 2022. And then we'll just copy and paste the same information over here for 2023. Okay. You guys with me so far? Okay, thumbs up, thumbs up. Okay, great. Now, what was the last one that was required? All relevant notes. That's all it said, right? All relevant notes. So now we need to ask ourselves, what are the relevant notes in this scenario? What are the notes that are prepared? I think the one is easy. Profit before tax. Okay. I wouldn't say that. Deferred tax note. You're on the right track. And what are the notes? Deferred tax, profit before tax. Let's go through the question again. So one of you said the deferred tax note is required. But okay, so you're correct in identifying that it would normally be required, but the required specifically said that you don't have to include it, right? So that's why we won't be doing it. Okay, but you are correct in identifying it. Inventory notes. Okay. Change in accounting policy notes, definitely. That will be one of the biggest things that I'll be looking out for. Okay, the change in accounting policy note. So that's the biggest one, right? So deferred tax would have been fine, but obviously it's not allowed. So there is another note, right? If you look at our income statements, remember we need the income tax expense note as well, right? So if we're looking at our notes, so again, we'll go and we'll say now, Sockets Limited notes for the right. So simple enough. And now we need to look at the notes that need to come out. So let's say note number 1 is normally your accounting policies. So we'll start off with note number 2, and we'll start this off with income tax expense, right? And we'll say major components of income tax expense. And then we have the whole same setup like how we had it previously, 20x23, 20x22. Because remember, comparatives are required. So comparatives are required, including the notes, not just the financial statements themselves. So bam, there we go. Right. Now we've got we don't need to go into detail. But these are the significance points that will be that need to be shown, right? And then we'll just say the total of that will be our income tax expense. So again, this is just lining up the skeleton for this, okay, so that we can see, okay, this is what our notes are going to be looking like. Again, we haven't even put in any amount as yet, but again, we need to have the skeleton, so to speak, because that's what we're going to be putting our marks into. Then the next one is our change in accounting policy note. Now I'm going to tell you why we didn't put the inventories note in, right? You weren't wrong by identifying it, but this is what the more relevant notes would be, right? So during the financial year, the company changed its into the valuation of inventories from the, what is it? In fact, what, I can actually just copy and paste this. So I can just say, if it allows me to copy and paste, I can just literally just that's your narrative information in the question. So yeah. Okay, that's not looking the way I wanted to. Okay, just why on earth is this happening?
See, Masum, this is what stresses me about typing during the exam.
Yeah, and normally this doesn't happen. I don't know why this thing is.
No, it probably does, but Murphy's Law, in the middle of the exam, it'll happen, and I just
But it's all, and this never ever happens to me, because it normally only happens if this wrap text is on. Otherwise, let me just run another cell. Here we go. So something up with the formatting there, so I'm just doing that. Here. But yeah, I do understand, like, the point that you're getting at, and obviously how it would, make you a bit more nervous about, doing things in instead of doing it, from the instead of doing it on the laptop, you'd rather type it out. So I do understand that. But I'd say just like, just try and practice and stuff so that you can get a, a bit more experience and skilled in doing it. So, then you do sort of get to this point where you can, if something does go wrong, well, unfortunately, Murphy's Law is just like that. But then you know how to rectify it. But I know under exam pressure, this will happen, and it'll always happen during the exam. But anyway, we've got the narrative information. So do this, guys. It's 3 marks. They do mark this, right? We'll get about 1 or 2 marks just for saying this. So at least with now, again, we don't have the information as yet. We don't know what the information is going to look like. We still need to do the calculations, right? But a lot of the time, you guys don't even have this drawn up as yet. And this is already all of the stuff that we've done, guys. I don't do it for fun. We are actually scoring marks for all of this. So you do get marks for all of this. And by the way, if none of this is here, the question is considered as not being attempted or not answered. And here's the other thing, guys, that seeing that you're always going to get a inventories thing, right? You can literally memorize what I'm doing now and just copy and paste the same thing because you know what the note will look like. The line items won't be different. Okay. So now let's actually get into the calculations for it. I know that I'm giving you guys a lot of writing to do, sorry. Have you guys gotten to that point? Have you guys written all of that information? Your templates, your formats, all of that? Okay, good. So now we need to actually do the calculation, right? Now the calculations, again, in your question paper, please, on a new page, you have to, and this is good exam technique, say calculations and then name your calculations. So I know exactly what your calculations, or the marker knows what your calculations are referring to. And the first calculation is going to be the easiest one, is to see now this whole thing with the change in accounting policy. So what would I call this calculation? Effect of the change in accounting policy. So this is the calculation with the whole, this year, last year, the difference, that whole story, you guys. I think you guys remember how that looks, right? So I'll say new policy, which is, I think it was FIFO, and you can just say FIFO weighted average because those are accepted acronyms. So you can just do it like that, right? If you feel it'll at least save you some time, you can do it in that way, right? And then you've got your increase in, but what I like doing is to say increase / decrease in inventory. Okay, so that it tells the marker if it's positive or unbracketed, it's an increase. If it's negative, it's a decrease, right? Then increase or decrease in our profits. Okay, and then we'll say tax effects at what are my tax rates, the 28%. Please include this that says that, so that the marker knows you multiply that by 28%. So you don't have to show the calculation, otherwise you would need to show it. And then you don't need to have anything for the last line, right? Now let's populate the difference over here. So now the order in which you do the calculation, I would say is, it does make a bit of a difference. So I would start off with the oldest year first. So I would start off with 2021. I know some calculations do it the other way around. I don't like that. So you'll say 2021, 2022, and then you've got 2023. You got that there, and let's just make that look neater. Okay, this is why I prefer typing it as well, because it just comes out looking better. But yeah, and then sometimes they'll have your SFP just to say that this is the balance sheet, this is the income statements, that kind of thing. So that normally is, just the format that gets given. But this is a standard format, right? Again, all your calculations for change in accounting policy with regards to inventory are going to look like this. You can literally just memorize this and write it down, right, before you even put in any amounts. But you don't need to even do that, because remember, we've been given the amounts. So you don't have to think of the amounts. Where's my question? Right, so the question is already given to me over here, right? So this is what we're starting off with, 2021, and you start with the new. And then we have the old. All of this information has to be given to you guys. Okay, and you guys are getting marks for now doing all of this, which is literally populating a template. Which is why I've said you guys get anything less than 80% for this. I think I'll unenroll you guys myself. And this is at third year level, guys. But obviously, when you initially start reading the question, it looks very daunting, which is understandable. But I got this the other way around. Yeah. Should be. And just make sure that you don't make the same mistake which I've made, which, as I said, it's easy. It's always new. And this is sometimes how the question will be presented, old over new, but then in your solution, it must be new over old. So just make sure you don't make that mistake. Again, it's a very simple error to make, and under the pressure of questioning, that can happen. I understand that, but again, because I am doing this, relatively calmly, I can see, okay, right, hang on, this is the thing, it's not making sense. It should be, it should be more, right? I'm not making my formatting exactly neat, but yeah, just to try and move on. And then obviously this is just an arithmetic calculation. Is equal to this minus that is equal to this minus that. Bam. Okay. How many of you guys are at this point who are following me, or thumbs up? You there with me? Nico? Okay. So now we know that this is the first part of the whole thing, right? So now what happens is that we need to do the change in the increase in the profits or the decrease in the profits. So the way this works is going to be this minus that, and is equal to this minus. Okay, I think you guys can do that. That's not so difficult. So obviously it's going to be this minus that, this minus that. If you guys had it from the newest one going forward, then it would have been this minus that. So whichever way works for you, doesn't really matter. Okay. As long as you follow this, logical flow of, the way we're getting to the calculation, and then tax effect of 28%, so is equal to this times 0.28. Just do that. Right, that's equal to this times 0. Equal to this times 2a's, and okay, those are the amounts. Obviously, these are going to be bracketed. I'm just not going into that whole formatting thing right now. And then is equal to this minus that, and we can just drag it and okay, we can't do that. Right. Equal to this minus that. Done. Okay, so that's our change in accounting policy effects. Okay, and that's pretty simple enough. That's not too difficult to do, although under exam conditions you guys mess it up like you can't believe. So the main thing is to keep yourself calm. And you see how quickly we did this? It didn't take time, right? But you need to practice it. So you guys need to do this over and over and over again. And as I said, these things are not going to change. This format is not going to change. It's going to look the exact same the way that it looks here. And then, now what is the next step? We need to start moving all of our information into the statements. Okay, right. So I'm just going to do the change in accounting policy part, predominantly because I think we're going to run out of time. But then we will, I will finish up the rest and then upload that as a separate video, I think, for you guys. But the main thing is that you guys can at least focus on the change in accounting policy part. So now let's go to the change in accounting policy. This is going to be, our standard format, right? So we will say decrease in our cost of sales, increase in income tax expense, increase in profits, right? So we got an increase in profit, which came around as a result of a decrease in cost of sales because the closing inventory balance went up. When your closing inventory balance goes up, it automatically results in a decrease in your cost of sales. If you have a decrease in your cost of sales, you're obviously going to have an increase in your income tax expense, which will then obviously be an increase in profit. So these two always have to be opposites to one another. I think that goes without saying. And then, so that's also the income statement side. Now we need to do the balance sheet side, right? So we said increase in inventory. We saw that all our inventory balances were just increasing. Then increase in current tax, increase in deferred tax. Now we know there will be this line item because why? They said SARS will not reopen the assessment. Okay, so what is good actually in exam technique out of, or let's say payable. You won't necessarily get penalized if you don't show this, but it's good structure to do this because a liability, because remember you could have had a deferred tax asset and you could have had current tax receivable. So the user of the financial statements will need to know what is what. Okay. As I was saying, we have this line item exists because SARS will not reopen the assessment. If SARS will reopen the assessment, we don't need this line item. Essentially, that's what that sentence is telling you. Okay, and then increase in equity. and then an increase in retained earnings at the beginning of the year. Or we can just say, yeah, I would say increase in retained earnings. Or you can just say adjustment to your retained earning, whatever you wanna call it. But yeah. Okay. So now we have the information for this. This is not difficult to get. I just say is equal to and then the income tax expense as well. And this is going to be this minus this. It should be shown in brackets, but just in the interest of time, just trying to work through it. Notice that for this income statement section, you'll never have any impact over here. Okay, so again, this is just moving the information from here to there, and you're getting marks for doing it, right? But you must have the note prepared. If you just have this calculation, but you don't have the note, you get no marks. They'll put a line through that. Okay, so make sure that you've transferred this info. So you don't just get marks just for having it there. You need to use it in your note. And again, guys, it's just transferring information. That's effectively all that you are doing. Okay, increase in our inventory for 2023. So we'll go to this. Okay, and what is the increase in my inventory? Sorry, not this one. So that's that. Now the current tax payable, that is only going to be for the current year. Remember? So because again, the SARS are not going to reopen the assessment. So that's only going to be the tax effect for the current year. This now will just be on the other line, right? So it'll say this will be the 444, and this will be the 36. Okay, now the increase in our equity is also just now an arithmetic calculation, which is as simple as this. Okay, which is not at all difficult to get to. And now our increase or change in our retained earnings for the year, this is what we need to get. Okay, so for this year, the increase in our retained earnings is going to be that cumulative change that we had over there, right? So it's going to be coming down to the change last year, because that's what will be the change in our opening balance of retained earnings now, cumulatively, and this will be that over there. You don't really have to show that specifically, but because you just need to show the net effect, but to show a complete note, then this is what you need to show. So you don't have to actually have this really shown. The main thing is just showing the adjustment to the retained earnings over there, right? So yeah, but it's good to show the complete note, and that is effectively our note done. Okay, that is our note done, and I'm just going to work on the retained earnings thing, the note over there, right? So because these are very linked. Okay, so we'll go to our change in accounting policy, right? So we go, or rather our retained earnings. What will you do? We'll go here. What was the balance before? This 2,990,000. So we'll just say the 2,990,000. In fact, now when you're doing the skeleton of this, it would be good to put this there. Then this was the 93,600. And then you just say is equal to this plus this. Always make sure that you complete this, because even if this amount is wrong, you'll get a method mark for this. Okay, so this is the a very free and easy mark to get. So I would highly suggest you always complete this note, right? So I'm not going to do the entire income statements yet with you guys, for the reason that we are going to run a little bit short on time. But basically, let me work on getting to our amounts in the income statement so that you guys can actually see, how do we get to the figures, right? So if you go to our profit before tax, this was given to us, right? Where's my profit before tax? This 4476, right? So obviously there has been an adjustment to this, right? There's been a decrease in my cost of sales. So I'll say it's equal to my 4476,123, right? And my cost of sales went up by, I think it was 35,400 or something like that. Or decreased over there, right? So it decreased by 35,400, meaning that my profit went up by 35,400, right? So I'll do the 1 year so that you guys, let me just do both one time, right? So that's going to be my profit. So that's the purpose of saying prepare the income statement, because obviously there is a change in the profit. So the income statement is to say, okay, how much the profit increased by, okay? Then with the last year's profit, the 2040, plus I think that was 28,600, right? So that's what we have over there. So let's say now you run short on time, okay, as is like what has happened here with us, okay, right? Now we are running short on time. So now we have, now we need to get to our income tax expense. Now, how are we going to do that? Because now we're running short on time, and, where do we go to from here? Because obviously there's, that shortage that we can't finish the question. So then here, even if you just assumed an amount and moved on, you get the method.
So if I can just interrupt you.
Yeah.
Is there any way we could maybe add on another half an hour so that we could just, because I've been enjoying how you've been going through the questions so strategically and seeing how your calculations are being put into the notes and the rest of the statements. Is it not possible to extend it so that we could do it?
Yeah, we can.
Is it
That's fine.
possible?
Okay, yeah, we can. Yeah, that's fine. I'll do
Please.
that. Yeah, because then at least you guys get the big picture. But then I'll also show you guys what to do in the event that you guys get stuck, so that you know where you need to just sort of change your amounts, right?
Okay, thanks a lot.
Okay, it's not a problem. Okay, so let's go back to where we were. Now we need our information for our income tax expense. So now we go to all of our income, all the information that we have been given over here. Okay, and now we obviously need information relating to our income tax expense notes, right? So this is now where we need to now calculate the, and quite a bit of calculations would actually come in terms of this line item over here, right? So let's go to the second calculation, which would be income tax expense. Now, what is the starting point for our income tax expense? It's going to be profits before tax, right? Guys, I think are familiar with that. Let me just say 2020, 23, and then 20x2. Right. This is right. So this is obviously the starting point of your profit before tax. So this is when they say, learn deferred tax and all of that comes in. You see, you do need to know how, this is the way that it gets integrated, right? So the profit before tax we have, this was given to us, this information. This will always be given to you then, right? So it's a 447,600. And I think it was 204, right? Now we need to say, okay, fine. Obviously, we can't calculate it just based on that. So there will be that increase in profits that we had for the current year, right? So let's say increase in profits. And this was the 194,000, right? And then for the previous year, it's the 158. But remember, they said the previous assessment will not be reopened. So we can ignore this. We can put that as 0. Right? Don't just leave it blank, guys. Please put a 0 there. Get a mark for that. Or half a mark. Okay? And then you'll get to your taxable income. Okay, which is going to be this plus this that's done over there. Okay, that's your taxable income. And then you'll just say current tax at 28%. Always include the tax rate, guys. It is important, right? Tells the marker what you've used, even though it's pretty self-explanatory. You'd be surprised. Right, now let's say you ran short on time, you had this, you couldn't put that information in there. At least put a 0 or something, or even put 500 in or whatever the case is, right? And then finish this calculation. So anything you're uncertain about, because now time is a problem, right? Just finish it, because you'll get maybe half a mark or a consequential mark for that. You'll definitely get at least half a mark and half a mark for that. But now if you only put that in there, you'd get half a mark, because it's information that was given. Now you didn't determine this. So now you're sitting and panicking, oh my God, oh my God, oh my God, right? But instead of doing that and getting nothing, you could at least put something in there. You'll get a consequential mark, right? Which is at least half a mark. You'll get half a mark at least for that. Maybe you won't get anything there, but you'll definitely get half a mark, half a mark. So there's 2 marks already. So you can either go, oh my God, oh my God, oh my God, or you can do what I've done. Don't know an amount, assume in the amount and move on. Okay, you will get a consequential somewhere and somewhere. Okay, and then you transfer it. Obviously, remember your calculations cannot be sitting there stagnant. You have to use your calculations, because if you don't use your calculations, you don't get marks for it. Okay, so you will have to then go to our sheets over there, and then we will say easy, to include our income tax expense. Okay, well, actually not yet, because remember we've still got deferred tax to consider. So if we ran short on time and you couldn't calculate your deferred tax, plug it in there, because then at least you've got something to work with, right? But where this would go for sure would be in your current tax expense calculation in your notes. So you'll say is equal to that. When you do this, will it work? Yeah, it does. Okay, great. Now we need our deferred tax. Okay. The secret thing is that anything that's a line item in your financial statements, you don't just transfer, you transfer to the note first, and then from the note you go into there. So now let's do our deferred tax calculation. Not the deferred tax note. We didn't have to do a deferred tax note. We just had to do a deferred tax calculation. So the deferred tax calculation, on this is where we would then have to then say, let me just do it this way. Let's see, what are the easiest way we took? Okay, let me write the year end rather. So 30 June 20 x 21. And this, by the way, guys, is as complicated as you can possibly get. So if you guys can do this question, I don't think you'll have a problem with any of the questions that you get. It's not much worse than this until you get to CTA. Okay, so for every single year that's being done, you will have your deferred tax calculation being done, right? So then, you know, the same thing, carrying amount, tax base, your temporary difference, and then your deferred tax, right? I'm just putting that in shorthand, but I think you guys know the amounts, right? So what was the old amounts? I think it was that 560, 1039, and 1081. Okay. So 560, 123, 1039, 23, and 1081, 23. Right, the tax base is, you would know, right? So this is important, right? SARS are not going to reopen the assessment. So again, they're going to include the old tax base. So this will be the 433, and this will be the, I think it was 880,400. The SARS are going to keep the old tax base. They don't care that you change your accounting policy. SARS will always keep the original one, right? That's what they're going to look at. And then the 108113, right? So that one is fine. And then our temporary difference is equal to this minus that. And we can just run across it that way, right? So that's not a problem. We're fine. And then A is equal to this times our 0.28. That's our deferred tax liability in total there. This is the 448. Our liability went up. So now what we need to do is we need to say, okay, fine. You guys know how to calculate the deferred tax liability part, right? So this is fine over there, but this went up. So deferred tax expense for 2021, not 2021, but for 2022 and for 2023. So remember, it's going to be this. Well, our deferred tax went up. So remember, we're crediting deferred tax, we're debiting our income tax expense. So that's the deferred tax expense that we'll have there. And then remember, for the following year, it's 0, and so it came down basically, right? So it's is equal to 0 minus this, so that our deferred tax expense has actually decreased in a nutshell. Okay, you guys with me on this one? Makes sense? Let me check on you guys. It's not too quiet. Okay. Okay, cool. Right, so then we go and we transfer these amounts to our deferred tax note. So remember, what is my expense for the current year? It came down by that much. And then what is my thing here? Let's go to, again, if we didn't know these amounts, you don't sit and panic. you just move on with life, right? You assume an amount and you continue. You get a method mark. Is equal to this plus that. Remember, you have to add both. That is how we come to our deferred tax balance. That's how we come to our income tax expense, because your income tax expense is your current plus your deferred. So bam, there's our amounts over there. And now we transfer this onto our income statement because our note is complete. So once your note is complete, you take it to the income statement, which is where? Here's my income statement. There we go. So you go to your income statements. There's that. There's that. When you say is equal to this minus this. And this is my profit for the year. Again, if you don't know the amount, you assume an amount, move on with life. Okay. And that'll be the one for, I know my formatting is not quite there, but yeah. Other comprehensive income for the year, don't just leave it blank. If it's 0, put it in as a 0, and then this plus this, that's done. Okay. Right, so there we have it. Maybe just now. But yeah, that's the income statement done. Now we need to do the statement of changes in equity, right? So we go to this total comprehensive income for the year, which is just a addition of that amount. There's this plus this. Okay, and then changes in equity for this year. So it's only the comprehensive income. So we go to that, and then it's equal to this plus that, and that's the amount. Okay. So, if you have it on your laptop, then you can just, format it nicely. So it looks like that. And that's what I do. Then you don't even need the R sign there on top. So this is why I'm a fan of doing it on your laptop, because it just looks so much better. But up to you guys, really. Either way, it doesn't really make a world of difference as long as your amounts are fine and they're referenced and they are in there properly. But it looks so much neater, and then the final ones. I'm not going to do all of that now. Okay, but then we've got our income statements, so that's done. We've got our statement of changes in equity, that's done. We've got our change in accounting policy note and income tax expense, that's done. And we've got our supporting calculations for all of that. Okay. Have we answered the required? We look at the question. We prepared that, we did the relevant notes, applying the new method, everything is fine. We weren't required to do a deferred tax note. Why we didn't do an inventories note? You only do the inventories note because remember, your inventories note is linked to your financial statements. So we didn't prepare a statement of financial position. If we did, then we had to disclose the inventories note. Your change in accounting policy note it's not linked to the face of a financial statement. It's a disclosure note that must always come up when you have a change in accounting policy. Okay. How many of you, and that's it. That's the question. That's pretty much the question done. So in terms of doing it the way that we did it, right, looking at when we started, we took about 1 hour, 10 minutes to do it, right, based on the time that was available, 34 marks. It's 1.5 minutes per mark. So we should have, finished it. Let's say what's half of the 17, so 34 plus 17 is 44:51. So we should have finished it in 51 minutes. That was the benchmark time. Obviously, I'm doing it slow to, explain it. But 51 minutes were the time in which we should have done it. We started, so we basically needed 20 minutes more. Okay. But obviously we're explaining the whole thing. So yeah, that's expected that it would take a little bit longer. So yeah, but was this fruitful for you guys? Do you guys have any questions on this? Now, do you see why you can never yes method this and why you can't start studying 2 days before your paper and do this? Well, do you think you're in the mental state to absorb anything that I've done now? 2 days before the exam, and remember, then you've got financial instruments and all of that, and this is, the basic for our change in accounting policy. We didn't even get to prior period errors. That's much harder. Once you get to prior period errors, that's where your integration with the other sections come in. Right? Accounting policy, this is easy. We know it's only going to be linked to this. But you can't move on from this if you don't know the others. The prior period error, everything is exactly the same way. The only thing that changes is obviously you don't know what your correcting journal entries will be, because that can be, now that's dependent on your error. So you don't know what your error is, so you can't actually have a change in, you can't have a fixed format per se because you don't know. Prabhashni asks, is it better to do the skeleton in the exam? Yeah, it is. I highly recommend that you start with the skeleton, then you know where you can fit in your amounts, and you're getting marks already because whatever is given, you can slot that in automatically. Your profit before tax, you obviously not going to be able to necessarily do, put that amount in as is because that's incorrect, right? So that will be used in your deferred tax calc and whatnot. But this is, again, how the question generally goes. So you would have to just do your skeleton first, your statement of changes your income statement. So your statement of profit or loss and other comprehensive income. You'll only ever really get the retained earnings section of your statement of changes in equity, and then your skeleton for your notes, right? It should be your income tax expense note, because your income tax will be linked to changes in your accounting policy, and then your effect of your change in accounting policy note, which I'd actually do first. That'll be the first calculation. That is what you guys are used to seeing, right? Then you obviously need to be, doing your calculations now. And your calculations will be starting off with your change in or effect of the change in accounting policy, and then you need to do your other calculations. Your other calculations will be your income tax and your deferred tax, right? So this is like the standard format. Then you finish your income tax, or you finish your effect of your change in accounting policy calculation, and then you populate it in the note immediately, right? And then that's done. Then once you've done that, then you can do your profit before tax, right? Because that's your next thing that you can pull in, because then you have information for that. Then for your income tax expense, you need to do your income tax calculations the way I showed you. Then you get that, and then you will, get to your profit before profit for the year in your statement of profit or loss and other comprehensive income. And then the last step is to do your statement of changes in equity, which is step 5, basically. Okay. Any questions that you guys have? No questions. Did you guys do the question with me, or were you mostly just like following?
Hi, Masum. I did the question with you, and I found it a lot easier. What I tend to do in the paper would be to do my frameworks for all that they've required, and then the calculations as well. But I also felt like your method of doing the calculations and then also just seeing where those answers get put into the notes and statements helped a lot, because we could do the calculations and understand what happens there, but then just to transfer those amounts to the correct places, that helped a lot. So thank you so much for that. It made a lot more sense.
Okay, perfect.
Yeah.
So I'm very, very happy to hear that at least it seems to have made a difference to you. So I'm glad to see that. I hope that is the case. And yeah, I would still recommend that you go through the question again on your own, because it's very easy while I'm there giving you guidance. But then obviously once you actually do it yourself, then it's like another story altogether. So this is how I do my classes. Will the recording be available? Yeah, it will be available. Because it was recording. If it's not recording, I'm gonna die. it was. Okay, thank God. So yeah, you will get it. I will upload it onto the thing, and then you guys can have a look at it as well and work through it in detail. And then this is, like I said, this is just the only first step in the whole process. Once we get into more and more advanced, but do you see why I say that it's impossible to say, you know, we're going to do a 1 hour class on this, and I'm going to finish changes in accounting policies, estimates, and errors, and you're ready to write. It's never. It's not realistic at all. I could have easily just done that and been like, hey, you know, I'll charge you guys 100 Rand for the class and gone through everything. But at the end of the day, you won't actually be able to do anything until you've gotten into the nitty-gritty of it. And I think that at the end of the day, you guys also know that, you know, with regards to the way that you've done your theory, and you link it now you see where the whole thing makes sense. So it does cover. So this is how you need to be doing your changes in accounting policies. What I advise is that you guys go through the videos that I've uploaded again, you know, as many times as possible, just so that you guys don't lose the theory, because the idea is to know it now the way you know it at the end. So revision is needs to be constant. So the way you've done this now, I don't expect, like, now again, in terms of the work program, right, that you guys will leave, you know, this now and be like, okay, fine, now you won't see this again after 3 weeks. You're gonna forget everything. Okay. So you need to actively do this, you know, on a daily basis, preferably, even if you spend half an hour doing it, just to revise the concept so that it starts cementing in your brain. Because if you don't do that, then you guys probably feel that way. You did accounting in week 1, come week 4 before the test, you don't remember anything that you've done. And now it's like you panicked again and you have to redo everything from scratch. You can't remember why you did certain things the way that you did and all of that. And, you know, so you need to at least dedicate half an hour a day to all of this and, you know, build it up. Other modules, okay, you guys are not yet enrolled for all of those other stuff, right? But I am going to be launching the management accounting one and the auditing one. So a lot of students have asked about that. So with that one, like I said, the accounting is more the heavy one. The auditing and the Mac is actually easy, to be honest, right? So I'm not too worried about those ones, but those ones, like the program will be ready from around Monday. I'm just setting everything up. If you guys do want to join in on those ones, remember that because you guys are part of this already, then you get it at a discounted rate. So normally that will be 350 per month as well. But because you guys are part of this and you guys, you know, are attending these classes, it will be averaged out at 250 per month for this and for that. So I'll only start charging you 150 per month for that one. Okay, if you guys are interested, then you just let me know, and then we'll you know, handle that when we get there. And that's for management accounting, and then for financial management as well. Okay, so you guys don't have to. But will I be doing AIN as well? Yeah, I am going to be doing. So AIN, same thing applies. Okay, so it's just to average it out and just to do the math. I know you did ask me about AIN. So that's how it works. Okay, so if you registered for one module, it's 350, but if you registered for more than one, then we average it out to make sure that, okay, it comes to 350, 250 per month for each one. Okay, and yeah, but I'll communicate further details with that. Are you guys in the auditing groups and stuff? Because I don't want to put everything in the financial accounting group, so I just wanted to be sure on that one.
Masum, could you maybe, like you say, you're going to put this recording up with the questions. Is there maybe other questions you could advise us that we could do on our own now after the session that would be good for us to look at?
I was going to set you guys a similar question, but what you can do instead, do you mind sending me your tutorial letters? Because I got last year's ones. I don't want to be using that. So if you send me your tutorial letters, I think you guys have a question bank for FAC3764 to you. I think you guys do. I'm not sure.
Yeah, they do send us study packs.
Okay, so first give me your tutorial letters and then the question bank, because the idea is you need to first do whatever is in your tutorial letter first. So that's part of the work program. So give me that. Then what I'll do is I'll tell you guys which questions from there to do. Thing is, a lot of them were integrated from what I remember. So I didn't want to go into the whole integrated thing as yet. I wanted to still show you guys the base, because as you can see, and no offense to you guys, but I don't think you're ready for the integration with all the other things just yet, because I think the change in accounting policy and the deferred tax link, that is the integration that needs to be more solid at this point, which I think is escaping a lot of students right now. And that is the tricky bit. But, you know, once we've cemented that, then we can, you know, focus on moving on. But send me your material, then I can see from there which one would be, you know, more realistic for you guys to be doing. And then I will tell, but you guys are going to need to do like more than one question as homework. I will tell you guys on the thing. I will upload the link to the WhatsApp group as well. So then you guys will have some, you know, we can communicate better there. Then I don't have to post in the group all the time. And yeah, we'll take it from there. Let me just go through the comments. I didn't read every single thing. Yeah, I would recommend you guys go through this question again. Okay. You're welcome, Nicole. I hope that did help you a lot. Method to memorize theory. So, okay, so that one, like I said, the videos that I've been sending you guys is the easiest way of doing it because the videos, I think I can stop sharing my screen at this point. The videos are going to be fundamentally what helps you guys in terms of the building up your theory, because you can go through the theory, you know, that I've given you